Moving on to the next concept, the concept of debit and credit. This concept is very easy to understand. In accounting, every transaction has at least two effects, which means one single transaction affects the basic accounting equation at least twice. Hence, the equation remains balanced at all times. These two aspects are known as debit and credit. Let's look at this transaction. It says that the business purchased machinery worth $6,000 on credit from RedTech Limited. By on credit, we usually understand that the business has purchased the machinery without paying for it. Hence, it owes $6,000 to RedTech Limited. Now let's break this transaction down according to the equation. The business purchased machinery, and as we have learned earlier, machinery is a non-current asset. Hence, purchasing machinery will increase the assets of the business. That's one of the effects we could figure out. Next, it says that the machinery was purchased on credit, which means the business has to repay $6,000 to RedTech Limited in the near future. Hence, it must be treated as a liability. That's the second effect we could figure out. So, we can safely say that this transaction has affected the basic accounting equation twice, leaving both sides completely balanced. It's time to talk about the concept of debit and credit. Generally, debit entries are associated with increase in assets and decrease in equity and capital. For example, if the business purchases machinery, it will have to debit machinery account since purchasing machinery will lead to an increase in assets. At the same time, credit entries are associated with decrease in assets and increase in equity and liability. For example, if the machinery is purchased on credit from RedTech Limited, then along with debiting machinery account, the business will also have to credit RedTech Limited account since purchasing on credit will eventually lead to increase in liabilities. Here is an easy way out to learn how to make journal entries. Always remember these two tricks. If a debit account increases in a transaction, the account will be debited. And if that account decreases, it will be credited, which is the opposite. Similarly, if a credit account increases in a transaction, it will be credited. And if it decreases, it will be debited. You can see which accounts fall under which category. Always remember that assets, expenses, purchases, revenue returns, and drawings fall under the debit category, which means that if any of these accounts increase in value, the account itself will be debited. On the other hand, liabilities, equity, income, revenue, and purchases return fall under the credit category. So if any of these accounts increase in value, the account itself will be credited. It will be the best for you if you keep this simple list in your mind while solving the journal entry problems. Now we shall practically learn how to journalize a transaction in 3 easy steps. Step 1. First point out the key items in the transaction. In the following transaction, the business purchased machinery by $6,000 on credit from RedTech Limited. The key items in this transaction are machinery and RedTech Limited. Step 2. Identify which item is increasing or decreasing. The first item identified in this transaction is machinery. Since machinery is an asset, we can say that in this transaction the value of assets is increasing as we are purchasing new machinery. Similarly, the next item identified is RedTech Limited. As the machinery was purchased on credit from RedTech Limited, we can say that RedTech Limited will be treated as a liability for the business. And so, because of purchasing machinery on credit, the value of liabilities will also be increasing. Step 3. Using the concept of debit and credit, journalize the transaction. Now we have identified the key items and the effect of this transaction on those items. Machinery is an asset, hence it is a debit item. According to the concept we have just learned, if a debit item increases in value, it must be debited. Since we are purchasing machinery, we are basically increasing the value of machinery. Therefore, in the first entry, machinery account will be debited by $6,000. On the other hand, since we are purchasing the machinery on credit from RedTech Limited, we are increasing our liability as we have to pay the money back to RedTech Limited someday in the near future. As liability is a credit item, an increase in liability will be recorded by a credit entry. So, We have to credit RedTech Limited account by $6,000 in order to completely journalize this transaction. Let us review this whole transaction before we wrap up. According to step 1, we have identified that machinery and RedTech Limited are the two key items of this transaction. According to step 2, we have figured out that assets and liabilities are both increasing in this particular transaction. In the last step, we have decided that an increase in asset will be recorded on the debit side and an increase in liability will be recorded on the credit side. Hence, to journalize this transaction, which says purchased machinery by $6,000 on credit from RedTech Limited, we have debited machinery account and credited RedTech Limited account by $6,000. And that is all about journalizing a transaction.